As a crypto investor that can, hold their own private keys, why would anyone want to invest into a cryptocurrency hedge fund at all? Who is this, best for?
Sure. So, crypto is a new asset class with a new set of technology risks. So I'd say the first thing you need to consider is your technology risk to the space, whether that's keeping your private key safe, understanding all of the cybersecurity risks that are associated with this ecosystem. And for, about 95% of people, and especially if you want to invest any significant amount of money, it just doesn't make sense for you to take on that risk yourself unless you're, a technology investor for a living. So that's one reason. Another reason, why would you invest in a fund at all is that I personally wouldn't recommend investing in a fund that holds or trades equities, because, the fees that eat into those returns just don't make sense. In terms of a crypto fund, the returns can be pretty good and the fees can certainly be justified. So those are some of the reasons why I would say that, a crypto fund might be the right fit for a certain type of investor. One thing I'd add is that there's, and especially in crypto, and there's definitely, more of an opportunity here for an actively managed strategy as opposed to other asset classes. And really that just stems down to the fact that there's rather few people and few funds that are actually evaluating these cryptos from a fundamentals standpoint. So if you think about, how these cryptos are actually being traded relative to the cash flows that they're producing and the utility that's being captured by these networks, we're still so early in this process that there's a massive opportunity for active management in crypto.
Mm-hmm. Yeah, and I know without naming any specific assets that you've had your share of success in some early crypto assets that are in a variety of sectors, whether that be IoT or the rise of DeFi. So crazy to see all of this coming into fruition, seeing going from silly ICOs to DeFi to oracles to NFTs and then Facebook rebranding. I think everybody is slowly but surely realizing where the space is headed.
Yeah.
It's crazy to see how far certain funds that were first movers, such as Pantera Capital and other funds such as Grayscale, are growing, and even just comparing the rate of return between the crypto assets versus the stock market. The stock market has been in a decade-long bull run. Even if there are returns, they're going to be largely diminished.
Yeah, I think that's super important. Concept you bring up, Kevin, is that if you look at the ROI on Coinbase stock relative to Bitcoin over the past couple of years, you'll find that Bitcoin outperforms the Coinbase stock. So that's a good proxy for saying, hey, there's actually a real fundamental value capture shift going on here. And if you take a step back and think about the stock market, the stock market, the global equities market is $122 trillion. The crypto market cap is around 2 trillion. So if you just want to make a bet on protocol value capture, you can do that just by, investing in Hierarchy Capital or investing in crypto assets. That's really the bet that you're making here, is that gap between equities and crypto is going to continue to shift. And that's because of the fundamental value capture business model shift between now, value capture can occur at the protocol level layer of the internet technology stack. The 15 years ago, all the value that was created by the internet accrued to equity in stocks, in the FANG stocks, essentially the application layer, right?
Mm-hmm.
And now we're seeing protocols like imagine if you could put a value on what Bluetooth provided to the world, probably be $1 trillion token, right? So now we're seeing that it come to life, and it's super exciting.